Your taxes. Some of the clients will benefit from this. Which of the following clients do not have a reason to file a federal income tax? All right.
Oh,
So,
Lisa.
oh, my bad. So Lisa, you say Lisa?
Mm-hmm. Yeah.
Lisa is
Yeah.
single, has one dependent, and made $9,500 for the tax year. You say that she wouldn't. Why wouldn't she want to file her taxes? I just want to know.
Oh, only because she made almost that 9,500, but she could. Yeah.
Okay,
Maybe you.
that's cool. I'm gonna see who else. Santana, Miss Pennington. You got a suggestion, choice on who you think might not want to file their taxes this year? Oh, still with us? My bad.
Hold on.
Yeah, my screen is showing everything. Yeah.
I don't know. I would say D.
D. Dorian is 60 years old, single, has no dependents, is self-deployed with net earnings of $750 during the tax year. Yeah, it would be D. D is the correct answer.
Okay, cool.
Nah, good job. All right. So the reason why D is the correct answer, one is because he made only $750 for the year, which is not enough to file a tax return or legal amount, and he not receiving no credits or nothing like that, because he's 60 years old and don't have no dependents. He is gonna receive a low income credit, but it's not really, worth it to be, unless he really wants to. You could pick C. Well, you wouldn't pick C because James is 19 and a full-time student. And as a full-time student, he receives a credit known as the American Opportunity Tax Credit. What that means is that he gets a credit because he went to school. They normally get about $1,500 due to the new tax changes from the tax law with 2022. That is now like $2,100 that they receive. When they put it on TurboTax, they're only gonna see that first little $1,500. They got to come see somebody like myself or like you all, and they can see $2,100 for that. Lisa is single, has one dependent, and made $9,500 for the tax year. Lisa, when she puts her tax return on TurboTax, she is going to get a refund, but it's not going to be the max refund, so she won't receive the max for her dependent, which is why if Lisa were to file with somebody like ourselves, she would receive the max. And for one dependent, the max refund for the upcoming 2023 is going to be about it's 3,000 for the child, and then it's an extra 1,500 for this thing called additional child tax credit. And then if they pay for the child to go to daycare, they get half of those expenses. So if they put out 7,000 for the child to go to daycare for the year, they will get 3,500 of that 7,000 back as a refund. So that's about 3,500 plus 4,500. That puts you at about 8,000 for one child. But that's only if you know what you're doing when you filing their tax. They just put it in themselves. They're only gonna see 23 or 27, maybe 31 with the 9,500. There's also something else that you have to do to help Lisa get to the max. And that's something that you learn in the tax. So in the class. All right, and Jay and Elaine are married, have 2 children, and have income for the tax year of $37,000. They are awesome. They married. They definitely want to file their taxes. Yeah. Please select the folder where you would like recording. This is from my first video together. I am going to And on my desktop. All right. Haven't done crazy then pop up. Oh, that'd be interesting. All right, so we're gonna keep going. All right, filing requirements for most taxpayers. All right, computer. All right. So based on what I just went over just now, most filing requirements is going to be first the filing status, the age at the end of the tax year, and their gross income. All right. So gross income is all the income received in the form of money, goods, property, services, pretty much everything that they make money off, or just earn a living off. I'll not explain that. Because some people are paid like living expenses versus actual money. So that's still gross income in their situation. All right. So next you see the standard deduction plus exemptions equal filing requirement. So here we go. All right. So Ms. Lowe, as you were stating earlier with the gentleman that made less than 9,500, he was like, because it was less than 10,400, then he wasn't required to file. Or that young lady that had a dependent. But due to the fact that she received those credits for her dependent, she would still be asked to file because that is a refund in her pocket. So you wasn't wrong. It's just like you would still kind of want to get her to file because she's going to get a refund if you get what I'm saying.
Terrell.
I'm listening.
Okay, so this right here, it changed. So it's not 12,400, it's 10. Okay.
No. So
This
this
just
right,
example.
all right. So this right here that we're looking at is based on 2017.
Okay, tell me something. Okay, cool.
All right, no. So yeah, all right. So the class is based on 2017 stuff, but in the tax software, it's gonna be based off of 2023 or 2022 tax rules, which is even higher than the 12,000. That is now the amount of gross income at which at least these people should file. As you get what I'm saying. See, right now I say 10,000. And then that's just under 65. So that's anybody that's under 65. They should be at 10,000 in 2017. But now it's like 13,000, something like that. And the main reason for that is because of inflation. Okay.
Yeah.
And now you all have kind of, I'm pretty sure you've all been to the grocery store lately. And when you went to the grocery store, I think a milk used to cost maybe $5, $7. I think it's like $10 now for some milk, depending on where you at.
It's the milk. It's anything from the little pins that you hang up, that you won't, you got no nails. I was like, damn, why it's so high? She said inflation. I said, yeah, I know that. I was just being sarcastic.
I don't know what type of milk y'all buying that costs that much.
Milk is high.
But I know eggs done went up extremely, but I ain't seen no $10 milk.
Yeah, milk high. But I mean, I'm just saying that's an example. It's like one.
Yeah. I'm just
even the lunchable meat is high now, but that is all due to the inflation. Okay, inflation is a two-piece sword. One, it's allowing people to make more money, and well, you got to make more money now to file. Okay, and if you don't make this much, then the government like, okay, we ain't even worried about you. Then at the same time, you don't really want to be those people that's not making as much as they're supposed to file, because that's really hard to maintain a household. But at the same time, that's the reason why people need to come see somebody like ourselves, because we get to give them the opportunity to tell the government, hey, that $10,400 that you say that I was supposed to make for the year, that wasn't just for me just living. That was for me to do X amount of dollars, blah, 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 medical, and so and so. But that's the reason why we're so important. Because without us, the government would just be like, hey, you made this amount, this how much you're supposed to pay taxes on. I need that back right now. So you're very important, very important. All right. Oh, also, do remember these numbers are different now, because when you put it in the tax software, it's going to be a higher amount for the standard deduction, okay? and again, they're finna go over that right now. So 2017, the standard deduction for married filing jointly was $12,700. Now, the reason why this number is $12,700 is because this part right here. You see where it says single? See the single part where it says single 6,350? 2 people equal $12,700. That's how they came up with married filing joint. Married filing jointly or qualifying widower, these are filing statuses, okay? Head of household, filing status. Single, filing status. Married filing separate, filing status, okay? Now, to be single doesn't mean that you're really single. That don't mean that you just get to go mingle with people and just go have a great time. No, not when it comes to taxes, okay? Probably single in real life, not when it comes to taxes, not like that. Head of household, this can be a single person, but it only could be a single person that has a dependent, okay? And there could be single people with dependents that are not head of household. So head of household is a person that is maintaining a household, which is why they're called head of household. So if you are living with your auntie or your great aunt, and or you living with your brother or your sister, and you're not putting in, you have a child, but you're not putting in all the money to maintain like over 50% of the money to make the house actually be a house, like such as paying 50% of the rent, 50% of the bills, and 50% of the maintenance and things like that, then you can't be head of household. Makes sense. You gotta support the house in order to become head of household. Only way to be that. All right, and so this in turn gets you a greater amount as a tax deduction if you are head of household. You see this right here? So back in the day, the reason why this is important, if y'all looking at my little clicker, I don't know if I can see it, but I'm clicking on the head of household amount. So people who were head of household would get a bigger refund than people who are single. And it's because of these numbers right here. And it's showing you that right now. All right, so pretty much people who are head of household will see about $2,000 increase, $2,700 increase versus the people that were single. All right. And then people that were married filing jointly, they will see they have 2 incomes together though. That's their problem. That's why they be needing extra help. But we'll go over all that pretty soon. But just remember that. That's why a lot of people, when they come file with you all, they'll be like, yeah, I'm head of household. I got a household in my name. But they really don't. And if you put them down as having one and the government don't approve their tax refund, they have to prove it. And if they don't have a lease in their name, they're not going to get that refund. You get hit with a $500 fine because you put something down that was inaccurate. That's the back end of it. So just remember that. Head of household, you got to have a lease in your name. If you don't have a lease in your name, you can't be head of household. All right, so exemptions amounts. We don't really have to go through that part. That's not really that important, that part. Not that one either. All right, but this is important. All right, most common tax return forms. All right, the reason why this is important is because back in the day, before computers, people used to use these 3 forms, okay? I'm talking like maybe about like 50, 60 years ago, but really when taxes first started, people used to use all 3 of these forms, all right? This is not really that important anymore, but as a tax professional, it's important for you to know where you came from to know where you're going. So that's the reason why you still kind of want to know about this knowledge, because when you run into the older crowd, it may say things like, I want to use the easy form. I only use a 1048. And if you don't know what that means, they're going to look at you funny and be like, you're not a tax professional, and now they ain't going to want to file their taxes with you because you ain't know what that tax form they was talking about. That we don't even use no more because we only use this one right here. All right, so y'all got questions before I continue? Cool. All right, so we only use Form 1040. Form 1040 is for people who have incomes All right, the actual, it's gonna, when I scroll down, it's gonna give me the actual numbers. I'm just trying to go off memory right now, the best as possible. But Form 1040, I'm listening. Somebody
So
finish.
what's the EZ and what's the 1040A?
Okay, all right. So 1040 is the one that we use. Everybody use almost every tax form or tax software, automatic 1040. Everybody get to use 10. 1040 EZ is the easy file, as they like to say, called a short form. For the elder or the older crowd, they may come in and be like, yeah, I want to use the short form. This is back when we used to have to write it out on paper. This is for people who make less than 125,000 for the year, and they're not claiming any exemptions. That's the easy. It's the easiest form. That's why they call it easy. Okay. 1040A. I don't want to misinform y'all, so I'm actually gonna scroll down because 1040A is a specific person who uses it and is between a specific range of money, but nobody uses it anymore because we all use 1040. Because like when you get into tax software, you're gonna automatically use a form 1040. And 1040 is the name of the tax, is the federal tax return, because you have state returns too. The federal return is the 1040. You'll see that too when you get into the tax software. And if y'all may have noticed that when you got copies of your own tax return, your federal was on the 1040. If you would have did, okay, 1040A is people that don't claim exemptions also, and they make less than 100,000. But they finna tell you all that right now. All right, so 1040 EZ. They talk about married filing jointly. And pretty much what this chart is saying right here is, sorry, so let me read it out. Is the taxpayer filing status single or married filing jointly? If the taxpayer is a non-resident, his filing status must be, okay, so what they're saying is if this answer is correct, or that this is like person who's filing agrees to these terms, then you can use this form. But if they do not agree to these terms, then it's a no, and then you go down to the next. That's how you read this little chart, okay? And so everybody who's on this side can use a 1040 easy, which is like I was telling y'all, it's the easiest form. They're not claiming any adjustments to income. This taxpayer is not claiming any credits other than the earned income credit. There are so many other credits, like 14 credits. And the taxpayer did not file for bankruptcy before October 16, 2005. That's important. Okay. This is important. And this is important when you like doing the review questions and things like that. When you're doing self-study, it's gonna help you answer those questions. All right, so 1048. Is the taxpayer income less than 100,000? Like I just was saying, the 1040A is for people who are gonna let the taxpayer who's not gonna itemize their deductions. Itemized deductions is the Schedule A. Okay, we're gonna go over that when I actually show it to y'all. But an itemized deduction would be such things as medical expenses, charity expenses, tools needed for work, cell phone bill for work. It could be any type of expense as long as you had an actual receipt. Tithes is also a big one for Schedule A, itemized deductions. And itemized deduction is not a tax deduction when it like what you hear when people be talking about like entrepreneurship and Schedule C. Okay, I'm gonna explain all that to y'all too, because you got the personal return, you got the business return. But the main thing is 1040A is for only people who have income less than 100,000 and they are not planning to use their not to itemize deduction. All right, and then 1040 EZ. This is for people who have income less than 100,000, but they are not going to get like credit. They're not really looking for their they get earned income credit because that's mandatory, but they're not looking for things like additional child tax credit and things. All right, and then the 1040, and the reason why everybody uses the 1040 is because it could be at 100,000 or less. Okay. This is a person that does want to use a Schedule A. And this is the reason why everybody uses it. This person uses the first time home buyer credit. This person has IRA. IRA stands for individual retirement accounts. Savers credits. Big. I hope that helped you, Miss Burns. Hope that helped you. All right,
Thank
so
you.
that's it. Did okay, cool. I'm not gonna go over them questions. They're not that important. Let me see. Let me see. Oh, nope. All right. So this is important. All right. When taxes must be filed. Everybody know that taxes must be filed by April 15th. Last year was very different. October 15th was the last day to file. That was mainly due to COVID and also due to the fact that Congress and a lot of other things was pretty out of whack last year. So October 15th ended up being the day. So COVID was the reason for the tax law change, was allowed to the October 15th. But that was the last day to file. So them people actually got extension to July 15th, and that would be the last day for them to file their tax return for 2022 and not receive penalties on it. This is just stating that it's important for you to file it. Then it's telling you about the form 4868 that Ms. Burns informed me of earlier, which is about extensions. It's just telling you that the reason that people do this is to avoid interest and penalty charges. There are a lot of people in the world, where there's actually 8 million people who did not file their taxes. They haven't filed their taxes, okay? With that being stated, these 8 million people are just, I don't know how they not filing their taxes. It's just, I don't know. I know I have to use my taxes to do everything, from getting an apartment to getting a car, for everything. So I don't know how you do not file your taxes. But there are people in this world who have not filed their taxes. There are about 8 million people who still have not received their stimulus checks, and they have until next year to file those prior returns, or they do not qualify to receive those payments. That's another big thing too. Yeah. All right, and then for the people who owe, they got these installment agreements, Form 9465. This is for people who are in red when you file their taxes. All because you in red does not mean that you do not have to file your taxes. When you're in red, you actually need to file your taxes. The reason for that is because you actually owe the government. So the government is looking for you to pay. You do not file, you're going to receive an even bigger penalty and even bigger charges. That is the reason why some people like to file Form 4868 so they can postpone when a tax bill will go in. But in the end, they still owe, they still need to get it in. And it's recommended that they file just like everybody else filed before April 15th. Okay. So when you get in those situations where you tried everything you can do, don't like overdo it on people itemized deductions, like I'm gonna show you in a moment. And don't overdo on tax deductions on people's Schedule C's. Don't double report, don't over report, and don't under report. As long as you maintain those things and you maintain your integrity as a tax preparer. All right, so where to file? We got different places that the things go to, but most of it is 1040. All right, so now they're talking about actual person filing themselves. So when you're filing using TurboTax, things like that, you get a self-selected personal PIN. I don't know if anybody have ever used TurboTax or H&R Block self-prepared taxes before. If you haven't, but at the end of the process, you sign your name, they take your social security, you pay, and then they give you a self-selected personal PIN. The reason for the self-selected personal PIN is because if you have an issue with your tax return, that is your way of talking to the IRS and not having to go through the automated system. You can actually talk to a person, give them that self-selected personal PIN, and they'll be able to pull up your tax return. All right. Form 8879 is for people like us. Okay. Form 8879 is the bank agreement that allows you to file a person's tax return. Okay. So if they don't sign the 8879, you did not get permission to file. Then you're in trouble now. Remember that. All right. All right. Payments amounts due. That's all in software. It's gonna print out a form. It's gonna tell them where to send it. You just tell them, hey, listen to it. You get to pay by credit card, debit card, or you can set up an installment agreement for the people that owe. Okay. All right. Accounting periods. This is important for your people that are self-employed, your entrepreneurs. We're probably just gonna do one chapter today. Because I did kind of mess up a few minutes with just getting everything in order. So we're gonna do one chapter today, and then as I go through the class, we'll just work on the timing and everything. But my main thing was to get everybody at least into Crosslink online, get everybody to understand the classwork, just Google Stream, give y'all the opportunity to ask any questions, and things like that. And of course, y'all can always go self-study this, okay? Remember that. Counting periods, like I was saying, this is very important for those who have their own business, self-employed. They're telling you the calendar year, the physical year. Most people be calendar year, okay? Physical year people are people who have accrual accounting. And this is like people who have S corps and corporations a lot. They have physical years versus calendar year. All right, and they go cash method and accrual, word I was trying to say earlier. And as I was saying, it's telling you the difference between the two. And again, okay? You just got to keep learning. And the more you learn, it's gonna become repetitive to you. Okay. All right, some more review questions. Okay, so thing that is important: no original or copy of Social Security card. So what that means is, it is very important that you get a copy of the person's socials, both theirs and the dependents, okay? Because there's gonna be people that's gonna be taking people's socials from like sheets of paper that they wrote it down on from like the very first time when they had the child, and that one time that somebody wrote it down, they would have like that little sheet of paper. You still need the Social Security card, because if you keep sending up the wrong social, you in turn are gonna make our office go into red, and the IRS is gonna make all our returns get audited. That's the best way to put it. So that's the reason why we ask for original copies of the Social Security card, because they get smudges on them. People don't take care of Social Security cards like they used to. So it might be an issue with getting that Social Security card, but I will explain all that later. But yes, just understand that this is real, and you still need it, even if it came off the tax return from last year and it's the number, and you know that that number went through. You still need the copy of the Social Security card for that person. And it's not a hard process to get one. But if they're gonna file with us, you're gonna need the copy of the Social Security. They're gonna at least have to go apply for that copy. If y'all have questions, comments, or concerns, y'all can ask. I'll go to the next one. The Social Security card is important. Trust me, very important. Really hard to do taxes without Social Security card. All right, so that's that one. All right, filing statuses, we went over that. This is just more detail. Oh, due to the new, okay, this is important. Filing status with same-sex married couples. All right, so with the new federal law that just got passed by the Senate, it just got passed by the Senate. It hasn't went through the House of Representatives yet, but it just got passed by the Senate. This is from 2017, also this book, but this knowledge is important because pretty much same-sex marriage couples will now get if it do go through by the time tax season comes into play, it will get the same filing status or filing exemption as married couples. So it won't just be statewide. So if you have a married couple that comes out of, and it will be legal federally. So depending on what state you're in, say you're in Alabama, which has like common law marriage, you'll learn about these things too when you start filing taxes. A lot of this becomes like knowledge that you have to gain because you have different things. But common law, you kind of practice it, kind of don't practice it. And common law means you're not really married, but you stayed in the same home for X amount of months, depending on which state you stayed in. Y'all are technically married. Most states do not acknowledge that anymore. But same sex is a federal thing that is about to almost become like all the way. They get the same filing statuses as married couples. Stay tuned for that. If that do happen, Crosslink does drop trainings, updates on the tax law. So the same way I get the updates, you'll get the updates too. But just be on the lookout for that. Right now, same-sex marriage is only applicable in the state, only in the states that is applicable. So what they're telling you in this is that on federal sense, you can't really say that they married federally yet in 2017. They recognize it, but if the state didn't recognize it, then that was kind of like the kickback. You get what I'm saying? So, but in 2022, the law is about to be changed to where the federal recognizes it and not everybody can get it. Okay. All right. So, because we all in different states, everybody's state. All right, married filing separate. These people, we tell them never to use this filing status, okay? The reason why is because if they use this, they're not going to receive any credits. And credits give you refunds. Some people have to do this, though, because they got like alimony, child support, and different court order things that's going on to where they have to file this way. But if they don't have all that court and probate and all that going on, and please try to get them not to file like this because they won't receive a refund. Okay. And these are the rules that I just was explaining. I had a household, that's mostly everybody. And that's the cost of maintaining the household. Again, you all can review all this. It's almost done. Review question, residency state. Okay, understanding W-2s. All right, so W-2s are important. The reason why W-2s are important is because the W-2 was sent in, just like you get one in the mail, one was sent into the IRS, okay? So when you put down the wrong numbers on somebody, W-2 on a tax return, it holds up their tax refund. If their tax refund get held up, you're not gonna get paid, I don't get paid, the client don't get paid, the bank don't get paid. Nobody got paid, okay? So with that being stated, it's very important that you put what you see. All right, so the reason why this is also important is because people can do paycheck stub estimations, but they do not need to file their taxes until they receive their W-2. The reason for that is the estimation may give them a higher number than the W-2. And if that is the case, they again will still get held up. They will not receive their refund in 7 to 21 business days, and so on and so on and so on. All right. And this is just pretty much saying that why people receive W-2s. You made over $600 for an employer and they actually held Medicare, Social Security, and Medicare taxes, then that's why you get a W-2. Now, if you work for me and I do not withhold income, Social Security, and Medicare from you, you're not going to receive a W-2 from me. You're going to receive 1099, which means that you are an independent contractor and that you worked with me, yeah, not for me. You know what I'm saying? It's different process. Those are 1099 people. So these people kind of can be considered having their own business, but they really don't really have their own business because it's more to having that than with having a business. I don't know how to explain that. But you'll kind of get that. You'll see as you do work. You'll be like, you're not really a business. You're just an independent contractor. You know what I'm saying? Right. So that's like your Uber drivers, your Lyft drivers. Like the government kind of see them as having their own business, but they're not really their own business. Makes sense? Because they Uber and Lyft. They are, but they're not. Because they don't go out and find their own clientele and they don't determine the price that the person pays them to drive the Uber Lyft car. That's determined before the person even get in the car. That's why they're not their own business, just on that term. All right, so here we go. And here we go. These are the items on the W-2. These are the most important items, okay? These are very important. Box 1, box B, all that is important. Paid prepared signature. All right, so right now you all are in training mode, okay? I haven't got your signatures yet, but when you do an actual tax return in 3 weeks, because that's when the season starts, in 3 weeks, you will have a paid prepared signature. Because you're paid prepared, these are the rules that you follow. It's important. And y'all are working on a computer, so you automatically have a signature on each one of your returns that's linked to your PTIN. A $50 fine may be imposed for each failure to sign, okay? Which could be up to $25,000 for the year. All right, now your PTIN. You all have a PTIN. Your PTIN is what is your social security number for tax return. That's explaining that. All right, now when you become a CPA or enrolled agent, you no longer need a PTIN. It automatically is included in it, okay? Third-party designee, we don't have that. All right, this is important. Require retention of records. Because we are tax preparers and tax partners, we must record records include copies of returns prepared in order to maintain a list of clients, and we must maintain it for 3 years from the date of the return. All right, so that's when you're gonna do things like you're gonna upload the client, such as what's that thing? God dog it. Social security cards and things like that, and W-2s. Okay. All right, we almost done, y'all. All right, so that's the first chapter. Congratulations. Yeah, I hope y'all still up. Hope y'all not dead. All right, so to start, we are going to do a pay stub estimation. We're gonna use one of my pay stubs. Don't laugh at me. I don't really make no money when I go to work for regular people. Gotta do taxes. So we're gonna use my pay stub, and we also gonna put me in the as a training return. Okay. All right. I'm in there like swimwear. One moment, I'm still giving this. So we could share it. Oh, cool. Watch this. I just sent you the Google Classroom link. And y'all can see me, right? Y'all see me?
Mm-hmm.
Everybody see my screen? We still, all right. So when you are in Crosslink online, like I was saying, dashboard on the side right here, everything, repairs, calendar, secure messages. This is where you can see your printed checks. This is a refund calculator. Okay. We don't really need that right now, though. Don't use the refund calculator. You don't need it. You actually gonna put the person in, and that's how you gonna determine that refund. All right. Oh, new return. All right. So to start, you have to have a social security number for the person. This would be the social security number of the taxpayer, which would be me. So if you are doing it right now yourself, you can do 438. You can do whatever number you want, honestly. Just don't do the number that I'm doing. All your practice returns will show up as practice returns. They don't like mess up on them. That's all y'all can put in right there. I'm finna hit add for those that's looking. Double entry, social security number. All right, so this part at the top, which would mean that like I lost my wife and I have and for 2 years I did not get remarried, and I could be a qualifying widower. That's what that is. Married filing jointly is 2. Head of household, I believe that's 5. But it's gonna tell me. I'll just kind of make the screen bigger. Yeah, one more. Oh, and you see where it says when I put 2 and 3, it made my spouse information pop up. That's because I'm selecting that I'm married filing jointly or something like that. But a lot of this, it normally shows it at the bottom of the screen. Oh, see, here we go. Field description. Okay, so if you got a question on what this little red marker right here is meaning, hit this little I, boom, and then, like I was telling you, 1 means single, 2 means married filing jointly, 3 means married filing separate, 4 is head of household, and 5 is qualifying survivor or qualifying widower. Whoa, why they call it qualifying survivor? That's scary. All right, so I'm gonna be 1, okay? Don't have any dependents. All right, so you put in my address. I'm gonna put in my company address, Vulcan Road. Oh, so care of would have been, say you was filing a tax return on behalf of somebody that passed away. That's where you put that information, okay? So say I passed away and my wife was filing a tax return on my behalf, this is where it would go. My name at the top, or she would just do a qualifying widower and not worry about doing one on my behalf. Make sense? All right, so this is the bank information. This is the referral policy. This is where you do the health insurance questions. Health insurance is important. If they receive a 1095 or 1095B or C, there's no need to fill out this information. If they receive a 1095A, it will come in the mail. A lot of people do not know that they're marketplace insurance. So you have to ask this multiple times. This is important. You have to be like, did you get Obamacare? Did you receive a deduction for you to pay for your health insurance? Those type of things, okay? You gotta really ask probing questions here, okay? Because if you do their tax refund and they do have a 1095A that they were supposed to report, it's gonna hold up their refund just like as if you put in the wrong information on a W-2. And what they have to do now is they have to mail in the form, which is a corrected 1095A. It's really easy to do. It's just an extra 15 minutes versus an extra 4 weeks for that person receiving a refund, which is another 3-4 weeks of you not getting paid. Because we don't get paid until the client. That's the other part. All right, so if I had a dependent, my dependent information would go here. It'd be first name, last name, date of birth, age, if they have an identity pin, social security number, their relationship to me, how many months they stayed in the home, and then the codes will automatically auto-populate based on these answers, okay? All right, so the part that you all really wanted to see is how to do, oh yeah, let me send y'all this. How to do it. You all have a copy of the paycheck I'm going over right now. All right, but the main thing is there is no form known as a paycheck that you can add to somebody 1040, and these are the forms. So I'm still sharing my screen with you all so you all can see exactly what I see. These are all the forms. Remember I was telling y'all earlier about 4869 or like let me just do 4868. Boom, automatic extension of file. W7, application for identity, whatever it is, even if we just wanted to know the name, we'll just change it to that, and then that's how you go from it. So anything that you don't understand or have never heard of, if you just type it in, you can normally find that form. A lot of these you only really need to use in certain situations. All these are not used for every tax return, of course not. If they was, you'll be filing people taxes all day. But for the things that do qualify for certain taxpayers, the knowledge base that you have would allow them to do things like employee retention credit. This is important for those that have a business and they have employees where they pay Medicare and Social Security taxes. That's what this credit right here is. This is also the one that y'all been hearing about on Instagram. I don't know if y'all got Instagram, but that's what this is right here, employee retention credit. All right. Let's see another one that you probably see a lot. Moving expenses. Yeah, each one of these forms allow you to come up with the amount. Some of these schedules will automatically populate once you put in certain information into the actual tax return. Like say if I had dependents, you don't actually have to add the schedule EIC and EIC check. It's gonna automatically populate. Do that make sense? Yes or no will help me. I don't know if y'all still with it. Because I'm looking at my screen. Another thing that I want y'all to notice is these right here, 1099Ks. This is what people are gonna receive for the Cash App, Stripes, PayPals, and things like that. Those that had over 600 and transactions, they're gonna receive these in the mail also. And I'm talking like not 600 from one transaction, 600 for the year. So if you got over $600 in your Cash App, you gonna get one of these yourself. Okay. And if you get one, you are now technically a business or a K1. Okay. All right, but I'll explain all that later as we continue. Okay, so first thing first, W-2. Because like I was telling you, when you're doing a paycheck estimation, there's no way for you to put a paycheck. You know what I'm saying? So that's why I just call that estimate. So a paycheck is a W-2. So you hit W-2 and you hit add. All right. You just hit, you go to add form, you hit the W-2, and then you just select add. You just highlight it and you just select add. That's the same way you want to do it if you want to add any of these other forms. And as you can see, it's already a RET 1040 on there. The reason for that is because this is the federal 1040 we're working on. Okay. All right. So here we go. I recommend if you have a calculator on your computer that you pull up your calculator. All right, pulling up my calculator. So big. Just takes up the whole screen. Okay, so the numbers that are important. This is my paycheck stuff. You all see it. This is how much I make an hour. It's how many hours I worked. This is what I made for that last pay period, which is horrible, but that's what it was. These are the numbers that really matter to us, okay? Social Security tax, the Medicare tax, and the Georgia state income tax, okay? The number that really matters is the Social Security tax, all right? The reason why the Social Security number matters is because that is the number that's telling you the year to date that was taken out. So this is the number that's actually gonna, and then this is my last paycheck of December. Well, this is not my last one, but if this was my last one, it would show it right here. So the last one of the last time I was, so say I quit this job and I dive 2.41. 0.41. Somebody woke up. Divided by 0.062 equals $9,554 right here. Y'all see how I got that?
Say those numbers one more time.
Divided by 0.062 equals $9,554 right here. Y'all see how I got that?
Say those numbers one more time.
No problem. No problem. I'm happy to repeat it because I was over here. I was sad for a little minute. I was like, what man? I can't teach no class. I don't know what I'm talking about. All right, so here we go. Here we go. All right, so this is the formula.
Uh-huh.
When you're looking at the paycheck, only thing you're looking at, you want to get that Social Security tax, okay? And that's 59241. 0.41. You want to divide this by 0.062. Okay. This came from, and I'm gonna explain this in a minute when I go back. That's why I kept getting mixed up. And that's gonna give you the total gross pay for the year, which is $9,555. Now you don't just want to take it from here. You do kind of see that it say this right here, but you just want to first do this part because not everybody has the same amount of Social Security tax taken out and when they make a certain amount of money, if you get what I'm saying. Like I'm below the see if you was just looking at this right now, you'd be like, I ain't even got a file because I'm below $12,000, remember? But there are people that make more than the 12,500 and they don't pay as much Social Security tax. Like this. But that's the reason why you go off this number, not this number here. And you're looking at the when you're doing the paycheck stub estimation. Okay? It's important. You take the Social Security tax. I'm gonna do it. Now I'm going back to my W-2. All right, so this is what I was saying. Wages, so you put 9,555. Then you go to my paycheck stub. It's telling you I had $87.28 withheld federal. So you put $87.28. You see the 592. You see the 592. You see the 139, 139. So now I got a federal refund of $615. You see that? Go with me?
Yeah.
And that is an estimation, pretty much. That's pretty much all you honestly could do right now when it comes to the wages part, because you don't have my EIN number, so you won't be able to file this yet until you get my W-2. But the tax person or the taxpayer now knows where they stand. They know how much of a refund they can get, and yeah, that's what that part is. And then when y'all come back on next Sunday, I'm gonna go over how to itemize my deductions, and y'all gonna see this refund increase. What we just did is pretty much a person just putting their tax return in on TurboTax or H&R Block, and you just putting in a normal W-2. You haven't done any itemization or nothing like that. It's just a normal tax return. This would normally cost about $100 to the person, maybe $150. But that's everything right there. Everything I have done has been recorded. So you can always play it back. In my next class, I have all the little kinks out the way. So it's gonna be a lot smoother. But overall today, we learned how to do a paycheck stub estimation. We learned how to add a W-2 to the tax return. We learned who uses a 1040 for their federal tax return, which is this right here. We learned about the client data screen, which is this right here. This is where you put the information for the client, information and status. And in classwork, we also reviewed just the general overview of this tax course. Got a better idea of who files taxes, when should they file, what is a W-2, what is a compliant, and what is a PTIN. And on the next class, on the 18th, we will discuss standard deduction and exemptions. We will also do types of income and discuss more about how that is reported. And at the end of the class, we'll have a quiz.
Sounds good.
That's everything. That's it. I do hope I helped and I wasn't too confusing. Sorry about that.